All right, team. Good afternoon. I hope you're all having a great day. I hope you had a great Sunday and you are ready for a very, very busy week ahead of us. Um, it's going to be very busy, you all. We have the elections and FOMC happening in the same week. So I'm assuming that volatility is going to be very high, and I have some theories on how I think the market will likely play out. And there are key levels that I'm looking at for where we are going to be bullish and when we are going to look for a correction to the downside. So in that case, bearish. So let's start off with you all first. How are you all doing so far, team? Are you ready for this week? I see Jorge is in here. Our BCO is in here. Micah is in here. Good afternoon, you all. I hope you're all having a great day so far, and you are all ready to get some rest. David is also in here. Dave, happy Sunday. Aggie Mom is in here. Happy Sunday. Aggie Mom, have you been participating in the 2K Cash account? I hope you have been. Nate, awesome to see you in here. Shandan, awesome to see you in here. And thank you for joining the mentorship family. Ash, thank you so much for being here. WK, I wonder how you've been doing so far. I hope you've been doing great. I hope you de-risked some positions and you are ready to pretty much let the markets play out and pretty much buy the dip when the opportunity does present itself. Team, I'm so excited for this week. Honest to God, deep down, I just want this all to be over. I just want the elections to be over because we've just been waiting for this moment for so long. And yeah, it's really, it's been like fighting, it's like having boss fights in a video game where you just constantly deal with, with one that's even crazier. And so far, we are, I think this week especially is going to be one of the most important events for this week. And for the rest of this year, whatever happens, I think we're going to have an easy time heading into the rest of this year. If you are all aware of the term Santa Rally, we're heading into that season now. We're heading into the end of this year. So depending on how the market is going to play out is really going to set us up for that potential Santa rally. And I think us catching it is going to be very, very profitable. So patience is going to be key. Patience is going to be virtue for the upcoming weeks here. And that's what I really want to bring to the team for this Sunday's meeting. Now, the way that the markets are looking, team, it looks like we may need to hedge. So it may be time to buy VIX on the dip heading into this week. So if you sense that let's say the market does rebound back up to 579 area. If the market rebounds there and we sense a lot of weakness, we're going to buy VIX, UVXY, or other market inverses to take advantage of the short-term downside. Pretty much, you can look at the VIX or the UVXY as the fear indicator. So considering that there would be a lot of fear coming into the markets, especially if we have a contested elections, then for the next 2 to 3 weeks, we could see some increase in fear index, which is VIX, and see some really nice opportunities. So this is a good way to hedge against your long-term stocks, your long-term portfolio, by buying one of these market inverses that performs well when the market comes down. But yeah, team, let me share my my S&P 500 analysis with you. Let's take a look at the events this week. So yeah, team, for Monday, we don't really have anything for this week's major U.S. economic reports and Fed speakers. This is the usual data that we look at. So for Monday, we don't really have much to worry about. Tuesday, we do have the U.S. trade deficit and ISM services, but nothing really too important there. Nothing too important on Wednesday as well. Now, for Thursday, this is where we're going to get some very, very key developments in the market that we will need to react to. So we got the initial jobless claims as usual for Thursday, but the most important event for this week is going to be the FOMC interest rate decision. This is where the Fed is going to have a 2-day meeting where they will have for the first day, they're going to decide, all the Fed speakers from all around the states are going to decide whether we're going to have a rate increase, a rate cut, or perhaps rates staying the same based off of the data that we got over the last couple of months. So this is going to be key here. Now, we did get a higher PCE data I believe on was it on Wednesday or Thursday's data that did affect the market, where we saw some selling come in. So if we go back to the S&P 500 here, we sold off from here all the way down here and pretty much continued that downside with no chances of rebound, and that was mostly because of the higher PCE data that came in. So yeah, it's going to be a very wild week. We have the elections on the 3rd, and then we have FOMC taking place on the 7th. So the two-day meeting is going to be decided on the 7th at 2 p.m. Eastern time, which is 10 a.m. for us, 11 a.m. for us on the West Coast. All right, so now I would like to share my S&P 500 analysis here, team. Let's go to the 4-hour here. As we can see on the daily chart, we could be repeating what happened in July 15th. So if you all remember back in mid-July, we had some really bearish selling, and that sent us down. That sent us down from pretty much 564 all the way down to 511, and that was a very sharp decline. So I'm pretty much seeing the same setup taking place here with the S&P 500, and I can even draw the rising. You see the rising channel as well, very similar to that one. And what seems to be happening here is, or the stages that we are so far in is right here. So we may possibly see some upside and fill this gap here at 579. And the reason why is because a lot of times bulls always seem to fill the gap, trap the bullish traders, and then slam right back down. We saw it very similarly here where the gap was right there. I mean, take a look at how similar these setups are. We had that bearish candle there, bearish candle, and then we had that inverted hammer looking candle, somewhat of an inverted hammer looking candle. So it's been very similar. So heading into this week, if we see some upside like that, where we fill the gap and then all of a sudden see some heavy sell-off back down, whether it be on FOMC day or pre-FOMC day on elections getting contested or something, then that would be a very bearish signal for more selling to come. And the reason why is because this is going to be the 3rd time that we will place a lower high. So let's take a look at the 4-hour time frame here. This is the 4-hour time frame. And taking a look at the 4-hour time frame here, SPY is showing a potential bearish head and shoulders pattern, which aligns with recent lower lows and lower highs. Late Thursday session printed a lower low here, as we can see, and that is setting the stage for a possible relief rally that could test the lower high this week around 578, 579 gap fill that we talked about right there. So if that ends up being the case and we see a lot of weakness, then I'm going to be very cautious, because this will be a repeat of what happened there starting with mid-July. So key levels to watch for this week. Obviously, we're going to target the gap fill right there. If bulls rally, they may push up to 579 to fill the recent gap. However, any selling pressure above this level, especially if we see a 50% retracement or more, what do I mean by that? If we touch that gap fill at 579, and then from 579, we have more than a 50% retracement of that move back down, from the given day's move, then that would clearly signify an overwhelming supply that could send prices much lower from there. So again, this could indicate a return to bearish momentum, so we should be very careful from there. Now, the support zone for bulls is right here at 565.38. This is the critical support for the bulls. A breakdown below this could really accelerate the selling, potentially dropping the S&P 500 towards the 550s, which is a key level for the bulls here. This would be where the 200 SMA simple moving average line would be aligning, and also this would get a retest of this major bullish uptrend that the bulls have been in ever since they started that bull market. So if I go to the daily chart here, we can see this is a test here. We went for a test there, and then came back down for a test there, got another test in. We're not able to get a test in at the 6,000s due to mixed earnings report from tech. And yeah, so far we have been seeing some sell-off, and the sell-off looks very similar to what we had back in July. So if that turns out to be the case, this could really provide some great opportunities for the short-term bears, as well as the long-term buyers like us who end up buying long-term swing trade at really, really good areas, at discount aisles, and pretty much reap the benefits of that investment by reaching our targets, and then pretty much having a really, really good ground on whether we're going to hold longer, depending on how the market is pretty much showing or if we are going to secure our profits there because the market is weak. But so far, I did want to share this setup with you that I noticed is just very, very eerie similar. As we can see, we are trading below the 20 EMA line there. So we may come back up. We may come back up, but be very careful for a trap operation that was very similar right there. So unless we regain 584, if we regain 584.49, it's over. Bulls are going to run heading into the end of this year. But if that doesn't turn out to be the case, and instead we come up to 579, we clearly reject, have a 50% retracement back down, close below the 576 area, especially below the 20 EMA line. Oh, team, you should be ready for some heavy selling. That's my thoughts for the S&P 500. Now, again, team, like I said, this pattern resembles the mid-July correction that we saw there, where we saw a significant red supply breakdown candle, triggering a sell-off. Similarly, if SPY fails to break above 581, the setup for a bearish correction remains strong heading into the elections week. I would like to add, team, that this is nothing to be scared of. Corrections like this provide amazing opportunities for us to buy cheap. We have to be open and adapt to market conditions and the sentiment in the upcoming weeks. This drop was partly due to the higher PCE data that we got last week, and this data really shook bulls because it is one of the key metrics for the Fed Reserve, where they pretty much respond to for gouging inflation. We have elections on the 3rd and FOMC on the 7th. That is going to greatly affect the market. Now, I do want to also mention that we have the CPI data in the 2nd week of November. So that's also going to be another pretty much liquidity that will get added to wherever this trend goes. Whether above 581, then the liquidity will come for the upside. If we break below 581 and pretty much get back down below 5, especially 565, then any liquidity that we get is only going to add to the selling to the downside. That's right, Jorge. So the call, the SPY call, the QQQ call that I'm holding, I'm hoping that if we get that upside on pretty much on Monday or Tuesday, then I'm going to take advantage of pretty much de-risking my position, having to take a loss on that call that we picked up, and pretty much be ready to take advantage of the downside. So looking at some of the stocks or some of the sectors that I believe is going to get some downside is XLF. Now, XLF is forming a bearish rising wedge formation, and bearish rising wedges are, pretty bearish. Once they break down, you see a very sharp decline. So if that turns out to be the case for XLF, then it may be good to buy a put on C, which is Citigroup. This one's looking like a potential reverse change back down where we could fill the gap at 61 and then even head down lower. So Citigroup may be a good one to buy a put on. 2 to 3 months out. I was looking at January 17. I believe I was looking at, I was looking at the January 17 62.50 put. It's currently at 2.9, but any discount that you can get it on, I think this will be a good opportunity. Now, I looked at all the sectors, team, and they're all looking bad. The only sector that's really looking good is the XLY sector, and this particular sector has Amazon and Tesla. So those two both surprise beat earnings, top and bottom, and they've been doing really well. They've been performing really well. So Amazon, we had a massive 6% update on Friday after the report, and so far this is looking good. If we look at the weekly time frame here, sorry, not the weekly, the weekly time frame here, we're finally getting that breakout candle that could break above 201 and see that rally continuation where Amazon will get 20% or so above its historic all-time highs from 4 years ago. So Amazon looks really good, and Tesla also. I'm not too despite Tesla really selling off on the weekly time frame after earnings, I still see it as a great opportunity. I think I will trade. I'm looking at several contracts for Tesla. I was looking at I think it may have been a March expiration for the 400 calls. I know it's a very, very far out strike, but I'm basically playing the IV for that one. And there are a few more contracts that I'm looking at for Tesla, but nothing below the January 17 expiration. I really would like to give myself time trading Tesla, and I think it's at one of those times where the opportunity could be good to pick up calls because bulls are going to be very defensive. They're going to try and turn this candle into a either they're going to so for the monthly time frame, let's go to the monthly time frame. what I think they're going to do is, even if we see some upside down here, they're going to bullish hammer back up and then pretty much get one of the monthly candle closes above 270 to get that breakout going. They have all of the setup, I mean, all the qualifications to get that expansion, and I think Tesla is going to get it. So I'll be watching Tesla. It is one of the stocks that I am bullish on the XLY sector. Now, team, I do want to note something else. Ever since Amazon beat its earnings on Thursday, I have seen rotation flowing into a lot of other retail stocks, such as I saw, I believe it was DG. So DG has this bullish divergence there, and it's getting above the 20 EMA line. I did see a couple other stocks that had some good rotation. So what I see, oh yeah, Lulu. Lulu's another one to mention. This one's been doing really, really well. Continues to get more momentum to the upside. Finally getting above the 70% to get that melt-up operation. I also saw Ulta doing really well here, sitting right at support, and could see that expansion. So I was looking at, I think I was looking at, what expiration was it? Now these, I'm not saying we're going to buy them right now, team. Yeah, it was January 17, and I think it was somewhere around like the 400, yeah, 400 call. Now I'm going to stay out because there's not a lot of open interest at the time. But there are a lot of stocks on the retail side of things that I'm looking at heading into this holiday season. Now, team, I do want to go over some other lists down here. Let's go over QQQ. So what happened with QQQ was we came up to where the historic all-time highs are, and we were just unable to break that level of resistance. We saw it there, we saw it right there, and we're just we're rejecting so far. We're rejecting so far. We haven't broken down below the key level that bulls have been maintaining, but it is very, very crucial that bulls on QQQ do not break below 484.49. So we did have some mixed earnings from some of these stocks. Amazon reported positive earnings. Apple reported mixed earnings. So what ended up happening is we gapped down to 220, went all the way back up, filled the gap at 225, and came right back down. So Apple, after losing this major uptrend line here, does not look good, and it is a bit scary there. So Microsoft, despite reporting positive earnings, this one's really sitting on the edge here. It had a major gap down from 432 all the way down to 407, and so far we're trading at 410. I did pick up a swing trade on that. I picked up the February 21st, 2025 475 call at 5.0, and at one point in the day, when we tested 415, the stock was up to 2.25%, and at the time we were up $80. I ended up not actually. I honestly was thinking about securing profits and then getting back in, but I was like, I'm not going to pull the team through that hassle, and I just hope that Microsoft will hold instead. But unfortunately, that just did not turn out to be the case. It didn't hold, but so far it still looks good. If we look at NASDAQ in after hours markets, NASDAQ is up really nice. It's up more than 0.25%. So this could mean that Microsoft is pushing up, as well as many other tech stocks on NASDAQ. So NASDAQ is really maintaining this trend, but once this trend is gone, team, you really got to be careful, and you gotta expect that downside to come in. Yeah, Microsoft was up 15%. Alex said Microsoft was up 15% within the first hour of the call out. Yeah, I saw that, Alex. I honestly just didn't sell it. I thought it would hold, but that obviously wasn't the case. It ended up selling off, and I was just looking at the market. I don't like to trade on Fridays, and I was just looking at the market, like I was shaking my head, like, "Are you serious right now?" Like, because I knew some of our team were in some of the trades, so I'm still rooting for our team, and I'm just looking at it like I cannot believe it. You know, they were not able to break out, and once I saw that double top, I was like, "Yeah, that's it. Today's just gonna be a bunch of sideways action, nonsensical Friday." But what they've been doing is we've been getting these kind of markets on Friday and then a gap up on Monday session. So I think we saw it last time too. But yeah, very interesting to see that so far. Yeah, we are definitely gapping up. We are seeing that little bit of a gap up on SPY. But yeah, team, if we reject 579, I'm going to be very bearish on the S&P 500, expecting this same move to play out. And yeah, I'll be very active on Discord as well, sending out alerts, making sure that the team benefits from this down move and also remains out of positions, de-risks a lot of their positions, gets prepared to buy the market much cheaper if the market does provide. Now, let's say what is the bad case scenario if that does happen? Let's say you end up being on the sidelines, you wait for the market to take a dip. Well, the worst case is the market will not take a dip, the market will go right back up. Well, if that ends up being the case and we get over 579, then this means that there will be so much upside room for that squeeze operation that we will greatly benefit. And as soon as we come back, it's just going to be that very, very easy printing money because the market is back to a trending phase. So I think we should be patient and really just wait for the market to provide us some data here. Once we go to 565, are we going to have some massive demand candles? Are we going to break down below 565? If we break down below 565, this could mean that we get some major correction. If we don't break down and instead we hold 565 with some heavy demand candles and we move right back up to 579, then this will be really great because this whole consolidation is going to birth another rally here. It's going to trigger another rally that could send us all the way to the 620s and 630s. That could really make us some amazing profits. So either way, I'm really looking forward to this, but I'm telling you, the power of staying out, the power of not trading during these very uncertain market conditions is as pretty much as good as having wins. So really just wait it out. Wait this time out. Let the market do what it's got to do. Let it collect the liquidity, and once we have all the liquidity and everything, we're just going to get back in and going to bank with the trend. But yeah, let's go over QQQ as well. So again, QQQ, the key level for bears to take over and trigger that correction is going to be 484. Below 484, QQQ is gone. Okay, you cannot be buying QQQ calls. All right, team. Below 484, you gotta really expect the market to be under some very overwhelming sell operation. So that's QQQ. And once we break above 500, then this means that we're going to get a 10 to 15% upside from there off of that new historic all-time highs. But I think the chances of that is so far low. Let's just see what happens heading into this crazy week, and we're going to assess from there. But please just be careful, okay? Make sure you're de-risking some positions. All right, DIA. So DIA is below the 20 EMA line, and this one also doesn't really look the best. It got a major move, creating new historic all-time highs at 433, which is 43,300 on the futures. And so far, yeah, it's just coming down and trading below the 20 EMA line and could continue to head lower. IWM now, IWM off of that higher PCE data also saw some weakness there, trading below the 20 EMA line. So far, really hanging on to dear life, but still looks like it needs more time. So wait it out for the small cap. Just know we are going to catch an absolutely amazing trade off of IWM once it's ready. So we are watching it on a day-to-day basis so that we can catch that beautiful opportunity on this IWM trade for the long term. So I'm really very excited, team, and I'm just watching it day by day, week by week for that to be ready to mature. So Amazon is pretty much the tech leader at the moment. Could be, if market sees any upside heading into this week, it's going to greatly benefit Amazon. So Amazon will see the easy 200 level, and this could be something that can be expected from Amazon. Apple pretty much reported bad earnings. We have a breakdown candle here, so we have lost uptrend. It is a bit concerning and could really see more downside. Microsoft, although I am holding a call on Microsoft, I am sitting on my butt here, very ready to cut losses as soon as we make new lows below 406. If Microsoft goes below 406, we must get out of that trade, because what that will signify is that we will go down, retest the bottom of this pretty much much bigger bullish bullish falling wedge formation or bullish pennant that is pretty much setting up for the future. So I know Microsoft looks very bearish at the moment, but once it's ready, it's going to perform really well. So if it's not ready, the signal is 406.60 for us to get out. So but if it does well, then and bulls really step in and regain 430s, then that's going to be beautiful for our trade. But yeah, below 406, we're out of that trade. All right, let's go to Meta. So Meta is really sitting on the edge here. It's still holding on. It's still inside of this zone from 562 support to 600 resistance. Despite reporting somewhat of a mixed earnings, it's trading below the 20 EMA line, but it's still holding the 562 support. Now, it is important to note that the sell-off candles were pretty sizable, and considering that we are very far away from the 200 SMA line, we haven't touched the 200 SMA line in a very long time, which has been about 2 years. This sell-off could be the catalyst here to get that test there. So if we get that test at the 200 SMA line, this is going to be an absolutely amazing opportunity for the long term to buy Meta at the support of that bullish channel, and then take advantage of that major expansion move back up. So yeah, Meta is trading inside of that consolidation, but it is kind of sitting on the edge there. All right, let's take a look at NVIDIA here. NVIDIA retested the level of resistance there, which is the early June historic all-time highs at 140. We ended up peaking there. We tried to hold above. We were just unable to. And come mixed earnings from tech, we have been selling off, and we're really struggling to close above the 20 EMA line. Now, we did close. We had so on Friday session, into the closing session, NVIDIA showed weakness and was trading below the 20 EMA line. And then about an hour into after the market closed, we got news that the Dow Jones was adding NVIDIA to its list, and it was replacing Intel. So that has now pushed the stock to 139.31 in after hours, and is currently trading right here at that gap fill there. So it is back up, and it is bullish. And yeah, so far it remains bullish, but do remember, if NVIDIA does go below 135, this is going to be 100% bearish, because that will set a potential head and shoulders on that one as well, and send it all the way down to 119 area. There's a gap at 119. We could fill that, and that could be a very, very healthy retest on that bullish ascending formation that can send the stock higher, just like we saw right here. Once we broke out, we saw a major up move. So it could do the same thing here, come back down to 115 area, really print a demand candle at that level of support, that rising uptrend line, come back up, break the 140.93 resistance level for the third time, which is confirmation, and pretty much get that big expansion there. So I think that would also very, very well align with their Blackwell chips release. So again, Tesla, I am bullish long term. I'm going to share some contracts that I am looking at. I'm looking at June expiration, and I'm also looking at I think it was an April expiration. So I'm playing IV on this trade, and I think it's going to play out well. So I'm going to time it a little bit more, and once it's ready, I'm going to send out an update for the team. That concludes my analysis for today's session. I'm going to now return to the chat and see if there are any questions that I can cover for our team. How do you feel so far about this whole week? Team, I do have 2 stocks on my watch list. Now, CHTR Charter, this is a post-earnings trade strategy. You guys know this this strategy usually does pretty good. We did a trade on ABBV on that strategy that ended up doing really well. We talked about we've been talking about several of these that have been doing really well. So let's go to our weekly watch list. But yeah, team, so far this is looking good. This is an earnings trade strategy, post-earnings trade strategy, buying to open CHTR January 17, 2025, 400 call at 9.50 to 11.0 on Monday's opening session. This trade is not for small accounts. It's for our bigger accounts who can't afford to lose a few $100s for the potential to gain $600 to $800. It's not recommended for smaller accounts to trade because it's not good to trade this setup, because this just doesn't have any contracts that has a good amount of open interest for us to trade for the smaller accounts. But this one for January 17 is perfect for our bigger account traders. So let's go take a look at CHTR here. CHTR reported earnings, and despite us selling off because the market sold off, the chances of bulls stepping in is very high. As we can see from the volume, this could be a nice rally-based rally that could send us to break above 383 heading into the end of this week. So this may be a good trade there if you want to pick it up. Set a stop loss for losing about $300, 200 to 300, for the potential to gain 600 to 800, maybe even $900 on this trade. Another one here, Starbucks is preparing for a breakout above 99.51 after getting some fair liquidity from the downside break fake out. So let's go over to Starbucks here. Starbucks is really holding above the 200 SMA line on the weekly chart. Has a rally-based rally set up, and looks like bulls may be stepping in to get that retest, to basically get a move above the 400s, move towards 105, which I think is where bulls are pretty much trying to head towards. So this is the daily chart here. It's been holding really well, and it looks really good. They reported earnings, and bulls just continue to eat the liquidity off of this one, and the chances of breaking above 99 and seeing 100 is quite high on Starbucks. So for this trade, I'm targeting a push above 99 on Starbucks, which will make the 100 call strikes gain intrinsic value. So if you know, with intrinsic value, it means real value. So if you see a gain of intrinsic value, that adds more value to your trade, where you can pretty much you can see a significant premium increase off of. So we may see that on Starbucks above 100 heading into this week, as well as the upcoming weeks here. I'm looking forward to trading Starbucks December 20, 100 call at 3.0 with a stop loss at 1.50. I'll be honest with you, I still feel a bit off, but I still wanted to bring this trade because having no bias is usually the best approach, has been the best approach, and it looks really good. Despite me having fear because of the overall market, the setup is there for Starbucks, and they can get that nice move. Coffee price has dropped $30 since October 15. Operating margins for Starbucks will increase if the trend continues. That's really great to hear, Alex. Thank you so much for sharing that. Honest to God, the setup is really there, and all time frames are pretty much pointing to some really nice upside on Starbucks. I leave the trade to you, team. It is on the weekly watch list, so you can look at it on your time. And yeah. Why not more time on Starbucks? Because this is a momentum trade, Charles, and I was looking at the longer term contracts, and they're just very expensive at the moment. So what I wanted to do for this particular trade is just take advantage of this current momentum, enjoy the intrinsic value increase above 99.51, and pretty much get out after a peak at 102, 103, or even 104. With $3 in deep in the money, that's around $300 of increase. So that would be a nice reward. But yeah, team, that's all for today's session. I hope you got some something from this. There wasn't really much to share. I just wanted to go over some of the setups, share my thought process on what's going on, bring some of the awareness of the events that are happening to you, so that you de-risk your positions and you pretty much wait on the sidelines. I am looking very excited for this week, team. To be honest with you, I am excited because two of the major events are going to be over, and I'm really excited to see where the rotation is going to flow into. So a lot to take in for the next 1 or 2 weeks. Let's see how it goes, and I'll see you all in Discord tomorrow morning.